to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. My name is Emeka, your host, and I'll be interviewing a variety amount of professionals in the real estate industry to help you get 1% closer to your goal of buying your next real estate investment. My goal with this podcast is to show the world that regular people like you and me can buy real estate to build wealth. And at the end of each podcast, we'll be giving 3 actionable steps that you can do today to get to your next investment. Today we have Brian Heller. Brian started his career as a TV producer for shows including Survivor, The Bachelor, and Ripley's Believe It or Not, before transitioning to investment real estate in 2010. Nearly 15 years, Brian has been in the forefront of transforming real estate investments into generational wealth for his investor clients by specializing in value-add apartment building investments. With an impressive resume totaling over 300 million in transactions, Brian has become a trusted expert leading high-performing teams. Brian's unparalleled expertise lies in the nuanced realm of apartment building investing, where he has consistently demonstrated his commitment to optimizing financial performance. As a value-add engineer, he spearheads the acquisitions, repositioning, and dispositions of properties, applying a strategic lens that goes beyond the immediate yield to unlock long-term potential. Currently residing in Nashville with his wife Holly and daughter Brooklyn, Brian's interests extend beyond real estate. As an extensive world traveler, avid golf enthusiast, classic rock connoisseur, and foodie, Brian brings a diverse perspective to both his personal and professional life. Let's listen to Brian.
Yeah, so my name is Brian Heller. I'm the founder and CEO of Fairway Equities. I'm an apartment syndicator, asset manager, capital raiser, and what I do is I help busy professionals and entrepreneurs to passively invest in multifamily apartment buildings. So my real goal is to, bring the investment opportunities that were once reserved primarily for the ultra wealthy to anybody, because the laws have changed and the world has changed, and the traditional stock portfolio of 60-40 is no longer the way to build wealth. And I want to help people to find their path and achieve financial freedom.
So how did you get into real estate, get into multifamily? Where did it all start?
Yeah, so it started because I became frustrated with my life in entertainment. It was a lot of fun in my 20s. I got to blow up mountains, I got to travel the world, got to have experiences that no one else would have. But ultimately, I realized if I was going to start a family, if I was going to gain control of my life, if I was going to build something, I needed to find a different path. And I actually had a friend who similarly was in entertainment and transferred over into real estate, and he really pushed me to try and go that way. And so ultimately I decided to get into brokerage, which I think is a great place for anyone to start out. And so I was an apartment broker in Los Angeles and started out that way, and through that also gained some experience as an on-site manager for one of my clients, managing a 30-unit building right off the Sunset Strip. And then over time, and after seeing my clients make significant profits through value add apartment buildings, I realized I really wanted to get more onto the principal side of things. And so ultimately I moved from Los Angeles to Nashville, where real estate was a lot cheaper, so that I could start to build my own portfolio. And I've been here 8 years now and got a great team in place. We've completed a full cycle deal where we delivered our investors some really quality returns. And now that the cycle's sort of about to reset here, we're really actively looking for our next opportunity and for investors to bring with us.
Oh, cool. You said the cycle's about to reset, or the market's about to reset. What do you think is going to happen next year?
Well, I don't think it's about what's going to happen, this year, what's going to happen next year. I mean, the bottom line is, for however long it is, usually a cycle is, call it 7 to 10 years. This last cycle was obviously significantly longer than that due to, a number of factors, global pandemic and things like that. But I think what we really need to get prepared for is this new interest rate environment, right? Interest rates have historically been around 6%, which means that, cap rates need to get back to being above in theory 6%, right? Like I can remember when I first started in the industry, Los Angeles was a 7 cap market. And if you tell that to a lot of people, they'd be like, oh my God, I could buy Los Angeles at a 7 cap. And the answer is yes, you could have in 2010. And you know what? Nobody wanted to buy in 2010, but those who did were very well rewarded, even those in 2011 and 2012 as things kind of finally started to unfreeze. And I see right now is a very similar time to that, right? Like everyone wants to be able to call the bottom and when it's gonna, you know, come back and there's going to be all this distress. And I think ultimately the banks will continue to kind of pretend and extend and try and I don't think we're going to see a ton of distressed assets. So granted, there are already some getting out there, and certain people are looking, and certain groups that got themselves in trouble are looking for a reset. But I think that what's happening is we're going to get back to that more historical mindset of call it 5 to 6% interest rates, 6% cap rates plus. And I think also just getting used to a higher expense ratio environment between taxes and insurance going down anytime soon. The world is just isn't going to be getting any cheaper.
So you help busy professionals, and can you tell us a little bit more about how you help them? And if someone who doesn't know much about how real estate can help their returns, or if they're trying to compare it to a different investment class, how are you able to guide them to invest with you?
Yeah, well, so a lot of people, when they think of real estate investing, they think of it as an active sort of task. One, they need to have the money to be able to, buy the property on their own. They need to sign on the debt. They're going to be responsible for the, tenants, termites, and toilets, and the day to day. And they don't want that call at 3 in the morning. They don't, know, kind of how to market and lease and deal with tenant laws and all that stuff. Well, what I do with apartment syndication is, I and my team sort of we put together the business plan. We become the general partners, the leaders of the deal, so to speak, and we go and find busy professionals that don't have the time or the energy or the desire to deal with the real estate and manage the business plan and put the team together. And basically, in essence, we do all that for them so that they can still take advantage of all the great opportunities that real estate brings, whether that be a second source of income to bring you some additional cash flow if you're an entrepreneur, so that all your eggs sort of aren't in the basket of just your business. I mean, anyone can benefit from multiple income streams, whether you're W-2 or an entrepreneur or busy professional. But obviously there are great tax benefits. When you buy and sell stocks, exactly what you're already going to pay. You're either going to pay short-term or long-term capital gains. But with real estate, even though the properties don't lose money because of things like depreciation, and ultimately you get these huge tax write-offs, and so you get to keep a lot more of what you make as well. So if you say made 100 grand in the stock market, you might only keep 85 of that. If you make 100 in real estate, you're likely to keep even more. So all great opportunities, and that's what we really try and do. We try and make real estate simple. We try and make real estate passive, and we try and make real estate fun so that anybody can benefit from all of the great opportunities that investing in real estate brings to someone.
No, that's amazing. And you went from the entertainment industry, and then you saw the opportunity in multifamily. And some people right now want to go full-time multifamily, kind of like you did. Well, then they say they don't have time, or there's a bunch of different kind of excuses that they have. What advice would you give to someone who's really trying to start to be an active player in multifamily, especially apartment syndications, or even just buying their first house?
Well, the piece of advice that I give to anybody wanting to get started in real estate is if they have the opportunity and they're young enough, or have don't aren't married or don't have children, and still sort of have a little bit of that freedom, is to go buy a duplex, right, and rent out one side and live in the other. So much better than renting when you're first starting off. In theory, you could go try and find a townhouse style. So one, you're going to get more space than you're going to get in an apartment, and two, you're probably going to be living rent free, especially if you brought in a roommate on your half and stuff as well. You might even be cash flowing, and it would really give you the opportunity to set up a strong foundation. I wish I would have done that instead of renting, but again, for most of my renting career I was in Los Angeles, and so to buy a duplex in Los Angeles for $1 million wasn't in my cards either. Now, if I had been here in Tennessee, then it's probably definitely something that I could have done. So, another piece of advice that I like to give to people is, build a foundation first, right? Make sure before you start investing or go buying real estate, make sure the foundation is strong. And in theory, I feel like that means paying off all your bad debt, like credit card debt, and then having a 6 month rainy day fund. Because if you start getting all these investments and you don't have all that other stuff set up, then you're setting up a pretty weak house of cards that can really easily get taken down, right? If you know that that you don't really have any other debt and you've got, a 6 month reserve fund, and then you're saving and then you're investing, you're going to be in a lot better spot, and you're going to look better to the banks and stuff as well. So you certainly can't go wrong with that. And then I would just say invest in real estate as soon as possible. Don't get stuck, in some of the the ideologies and stuff of the past that, the only way to secure and save for retirement is to invest in stocks and, do the traditional 60/40 split or whatever, depending on what your age is. I really wish I had started investing in real estate earlier and investing in stocks and stuff less.
So besides investing in real estate earlier, would you do anything differently from the time you learned about real estate till now and how you got started?
No, I really like the path that I took. I think starting in brokerage is a really good place to start. I mean, I guess you know what the answer is. I would wish I would have moved to Nashville sooner. That's the answer. The California is just such a competitive market and expensive market. I would encourage people to find a market to get started off in that's more affordable.
How did you land on Nashville, Tennessee?
We had some friends and some family and stuff here, and compared to other places that we knew we wanted to get out of California, but originally we had friends in, New York and Seattle and San Francisco, and that didn't change any of the dynamics. All those cities are just as expensive, and eventually we went on a trip to Nashville, and our friend showed us some real estate, and we were like, wait, you can get 4,000 square feet for $400,000. This is a $2 million house in LA, and that was kind of the start of it all.
Well, tell us your goals with everything. Do you want to just get as many units as you can? Is there a cash flow number? You just want to be a GP forever? Or what's your, 10 to 20-year outlook in real estate?
My goal is to build a comfortable portfolio that ultimately creates enough cash flow to replace my income, so that I can play as much golf as possible and travel as much as possible. But no, I just really want to get involved in good deals, improve communities, help investors to build generational wealth through real estate, and just help educate people and stuff as well about the powers of real estate. So I don't need to be a world changing mogul. I just want to have a great life with my family and friends, and like I said, experience and travel the world as much as possible.
Amazing. Now, if you can give three actionable steps to someone today, give them actionable steps that they can do right now, what would you tell them to do to get started in real estate?
Pick a market that you know backwards and forwards. Reach out to at least three brokers a week and underwrite at least three deals a week.
I love it. I love it. Something simple and something easy that everybody can do for free, which I feel like people definitely take advantage of. They just make an excuse and say they don't have time. But with that, let's move on to the next segment of the show where I ask everybody the same three questions. All righty. Now, if there's two books that you could recommend the aspiring investor to read, what would they be?
So I'm going to mention two books that I read recently. I mean, I'm sure there's a bunch of books that come up quite frequently, and I won't even name them. But I'm going to go with Killing Sacred Cows, Overcoming the Financial Myths That Are Destroying Your Prosperity by Garrett Gunderson, and then $100 Million Leads by Alex Hormozy.
That's definitely a good one. Two, what has been the most impactful speech or lesson that's helped you in your career?
So there's a speech by Calvin Coolidge, The Power of Persistence, and it's certainly a great reminder all the time about the power of persistence and by pressing on, how you can really improve your life.
I love that. And lastly, if you could have dinner with anyone dead or alive, who would it be and why?
Yeah, so this is a fun one. I go back and forth, but the answer that I'm going to give you is Michael Jordan. He's the GOAT. He's got a winning mindset. He's got the heart of a champion. He's not only a great athlete, but he's been a great businessman, and he loves golf. So, you know, there you
Everything you
have
can
it.
ask for all at once. Now tell the audience what you need or how they can help you or reach out to you.
Yeah, so I mean, right now my big push is just for more limited partner investors. So if anyone is looking to learn more about how they can invest passively in multifamily real estate and or just general real estate education, I'm about to start producing some more content, and so always more than happy to answer any questions you have, whether you want to invest actively or passively. But if you want to invest passively, we'd love to have you in some of our upcoming projects. I hope to have some new deals here in the next month or so. I'm doing some travel here in a few weeks to go check out one deal, and just waiting on the GPs to get back to me on another. So otherwise, the best thing you can do if you want to learn more about what we're doing at Fairway Equities is to check out our website at www.fairwayequities.com. There's some free resources and stuff there, like a due diligence checklist and an ebook, and should have some exciting webinars coming out soon as well.
Well, Brian, thank you so much for joining the show and hope to have you again.
Thanks for having me.